The Nigerian Equities All Share Index started the week in a negative territory today, failing to build on the positive momentum from last week. Analysts say they expect the negative sentiment to persist in the short term due to last week's interest rate hike by the Central Bank of Nigeria. Muktar Mohammed, analyst at Assar Investment, joins me to share his forecast for trading this week. Muktar, thank you so much. It's a pleasure, always a pleasure to have you on the show. Let's get right to it. We're seeing the market losing some momentum today, but we did see a good performance last week. The All Share Index up for the week over 2%. Well, we did have that major market event, the MPC meeting, where we saw the Central Bank or the MPC raising interest rates to 13%. Now, what analysts have been telling us is that they expect to see a shift of investor interest from risky assets like stocks to the fixed income market. But what is your perspective?
Well, if that's what they were expecting to see, we didn't see that immediately last week. We could say that we could say the only negativity we had in that result last week was when we saw the banking stock, especially financial stocks, suffered that very day. And after that, there's been a gradual recovery from the financial stocks after the MPC meeting. Yes, we expect that to happen in the short term, like you said, but the long-term view of the equity market is still very, very positive, especially when you're looking at the fixed income market. When you look at what you get in the 90 days, 181 days, or 365 days, then you compare that with what you get in terms of dividend yield in some of these companies that are listed, especially the financial stocks, those that are paying interim dividends. So it still looks buoyant for investors to still keep their eyes on the equity market, even is for the short-term run, especially when you are viewing stocks that will be paying interim dividends very soon.
And what does this mean for portfolio investors? Today's the 30th. We have just one more day of trading for the month of May. So we're still in the second quarter. And we know that interest rates, we've seen other central banks outside of our shores, even within and outside of the continent, increasing interest rates. And analysts tell us that this may continue. We may see, don't know what to say about the Central Bank of Nigeria, but what we're hearing is that this may be a trend that is here to stay. And I know this is definitely something portfolio investors will take into account as they rebalance their portfolios, going into the new trading month. But what do you see happening? What stocks do you see investors, portfolio managers shedding? Are they going to be going into safe haven stocks? What's on interest right now?
Well, I think your interest is still, like I said, on those equities that will be paying interim dividends. I think those will be investor safe havens, and that also depends on your entry levels into those equities. And also, like you always know, in Nigerian, cash is power, what I call liquidity is power. And so most of them will still be going to these companies that will be paying interim dividends to pile up liquidity. And maybe after that, we might see a slowdown, whereby some of these portfolio investors will reshuffle some of those dividends that they've collected from these mid-term companies and then begin to put it in the fixed income space, especially to maintain that dividend yield comparable to if they have to trade in the market in the short term. So I see that playing out, but we must not forget that you cannot take the stock market out of the economy, just like you cannot take the economy out of the stock market. So there is a challenge in the economy, definitely will play in the stock market. But if you look at what we've experienced thus far, the stock market seems to be doing positively well than what we see the economy doing.
I guess, what you're basically saying is that what we're seeing at the stock market is a true reflection of what we're seeing in the macro economy.
Yeah, it depends. So if you look at some of the equities and mostly the banking stocks, the result they have released thus far, then you could say that they are beginning to go into a little bit of stability. But you must look at it this way, that a lot of companies that were shut down or sectors that were not open up have gradually begin to open up since the beginning of last year. And so we saw that play out in the bottom line of the banking stocks especially. So I think you might be right with what you just said.
Now, despite the headwinds we've seen, within the economy this year, I'm just looking at some of the key NGX indices from banking, insurance, consumer goods, and they're actually all in the green, especially with particular focus on the consumer goods. We know, how companies in that sector have been struggling, the inflation that has sparked the cost of living crisis, not just in Nigeria, outside our shores also, and we've seen that, price increase in a number of consumer goods, fast-moving consumer goods. The brewers, they've been able to pass on costs to consumers. But talk to us about this trend. How long do you think this can continue? We know that inflation, analysts tell us that we should expect inflation upwards of up to 20%, even by the end of this year. It just gets me. I'm just wondering, what does this mean for the average consumer?
Well, it doesn't tell well for the average consumer, especially when they are not their earnings are not coming any time up. So we mustn't forget that some of these companies are not they are I mean the Nigerians, especially the consumers, they are not experiencing any positivity in the area of their earnings going up. So definitely we expect that to have played in the bottom line. But when you look at those key drivers in the consumer space, you realize that most of those key conglomerates were those companies that are into infrastructure development, that you saw those movements from, especially the cement sector. So you continue to see those movements there because government will be doing a lot of infrastructural development, a lot of in terms of provision of housing, the road network. So when you look at that, you know that it will still happen. And once this happens, there will be a lot of people that will be gainfully employed, and so then they will have also to be using some of these consumer goods also. So that's a snowball effect that we will see in the short term. But going forward in the long term, when this inflation starts probably in there, they begin to push it to the consumers. And then there might be a reduction in terms of, if I'm buying two products, I'll begin to think of how I'll buy one. So and at that point, then you begin to see that will also affect the bottom line of the companies, and that will come out, we'll begin to see that. But for now, I think they are good because of whatever adjustment we are seeing now. It's something that is for the short term, but going forward, we could see those fixed income, those MPC decisions begin to play in, especially in the consumer space.